The Senate passed the 2022 to 2024 medium-term expenditure framework and fiscal strategy paper ahead of the expected presentation of the 2022 appropriation bill to the National Assembly by President Muhammadu Buhari. The passage of the 2022-2024 medium-term expenditure framework was sequel to the consideration and deliberation of a report by the Joint Committees on Finance, Local and Foreign Debt, Banking, Insurance and other financial institutions, petroleum resources upstream, downstream, petroleum sector and gas. The passage is expected to improve the nation's macroeconomic situation or reposition the economy. Well, let's discuss this more. I introduced her earlier. She's a semi-senior corporate finance, Deloitte Nigeria, Temitope Olugbile. It's good to see you, Temitope. How are you today?
Hi, good afternoon. Pleasure to be here.
Great. Let's start off first with your reaction to Senate's approval of the 2022-2024 MTEF, pegging the oil benchmark at $57 per barrel, exchange rate at 410 naira to $1. First, how does this come to you?
Okay, so if we first of all look at the timing, I mean, it shows their commitment to a January to December fiscal year, so that's good in terms of timing. And you know what follows subsequently is the president submitting the 2022 budget to the National Assembly, so that shows commitment on that side. Now to the assumptions, I mean one could say it's optimistic, because if you look at like a GDP assumption of 4.2% for the year 2022, exchange rate at 410, I mean that's fair enough, you know, considering that the CBN governor said just last week that the only exchange rate window of, you know, that is being considered is the official exchange rate. And so long as they're able to match the supply of dollars to the demand coming from the commercial banks now, I think that is, because right now official rate is about 410, so that is fair enough, and that also shows a form of commitment. Inflation at 13%, I mean that is I suppose the fiscal team would have to work closely with the monetary team to make that happen, considering the current inflation rate. But it's definitely achievable if, you know, there's a coordination of both teams. So I mean, in terms of assumptions, it's pretty fair enough, and it just needs to be there needs to be a synergy among, you know, the fiscal and monetary teams to make some of these assumptions happen.
Very quickly, before I go to my second question, I'm just taking this off what you said earlier, looking at the Forex market. A lot of activities, a lot of issues with regards to this demand and supply saga. And we also still have this disparity when it comes to rates and all of that. Do you think the banks can address this? Sincerely, don't you think they are overwhelmed?
I mean, it's possible. It's possible because what you've done is you've diverted traffic from, you know, multiple sources to just one source. So it is definitely it's understandable if the banks are overwhelmed, which I think they are. But you know, so what needs to be done is to, in a sense, quicken the process. You know, there might be some, you know, you can use technology to address this. You can use a coordination between the commercial banks and the CBN, you know, to address that. So what needs to happen is a quicker turnaround time of, you know, Forex demand by, you know, manufacturers and, you know, other legitimate reasons for Forex. So if there's no quicker turnaround, you start to see, you know, manufacturers feeling the effect, which I suppose they already are. You know, there's a slowdown in inputs being imported, you know, so that all of that could cause some, in a sense, a form of inflationary pressure if it's not managed properly. So there needs to be a quicker turnaround time, and there need to be increased supply of, you know, the Forex to the bank. So I think that's what, you know, approvals need to be done in a much more efficient manner if you want to free up demand, if you want to address the already pent up demand that is being addressed at the commercial bank side now. So that I think is what can be done to ease up the pressure.
If you're still there, let's quickly look at crude oil production, which is another thing that is a forecast daily production of about 1.8 million barrels per day and 2.3 million per day. Look at these projections and what we have at the moment. Do you see us achieving this?
I see us achieving it, given that we are, in a sense, successfully handling the pipeline vandalism. The peak we had of it some years ago. But ultimately, I think that our crude oil production is still dependent on OPEC's guidelines, so we have that room to increase a bit based on the new OPEC quota, and so we have that. It's definitely possible, but we need to be in a sense more compliant with OPEC's production quota, so that we don't face any consequences for non-compliance. But other than that, I think it's definitely possible and feasible.
Also, a fiscal deficit estimate of 5.62 trillion naira was also approved. What do you make of this and even our debt burden at the moment?
Yeah, so debt has been the topic of a very controversial topic over the last few weeks, and just a few days ago, Nigeria successfully raised some more euro bonds, about $4 billion, I believe, and so that has been a very controversial topic, given that our debt burden keeps rising. But I think the main topic of what we should really be focusing on is how we are using the budget. So we know that every country must borrow, right? Every country must borrow some funds to effectively run its economy. So the borrowing is not the problem, it's how you are using it. So if we see and if we're able to track that this debt is actually being used for capital projects that can essentially pay itself back, then the topic wouldn't be so controversial. So given that the euro bond was actually oversubscribed, we see that there's still some form of confidence in the Nigerian economy for investors. But we must take caution to not let our investors for 1 second doubt our ability to pay back these loans, because it's not just in your inability to pay back, it's in what they expect. They wouldn't wait for 10 years time to see that you're not able to pay back. It's how they perceive your economy. So it's important that we take note of the perception of foreign investors in our economy, and use our debt judiciously and effectively. And I suppose it's still fine to borrow, it's just what you're using your debt for that we must take caution of.
Let's wrap up with this in 1 minute. Let's just try to do it in 1 minute. I know it's difficult, but President Buhari just spoke around the insecurity across the globe and what that is, telling the effect on investments. Now, what do you make of this, considering Nigeria, insecurity and investment drive?
So if you take, for instance, the foreign direct investment flows, a foreign direct investor wants to actually come and stay for the long run. So they need to be sure that if they set up structures, they set up infrastructure, the insecurity is not going to affect the returns of that investment. So if you look at it in that way, you start to understand the correlation between insecurity and the perception of the investors. So it's very important that we deal with insecurity, because even beyond the inflationary pressure it's already having, it's the perception of investors. I want to make returns as an investor, and so I need to understand and really factor in how insecurity can affect any structure I'm setting up. So it's something to definitely address, and we should have addressed it as early as yesterday, but it's not too late. We just need to really understand how that is affecting the flows of investment into our country.
I must thank you so much for your time, and thanks for your understanding, for staying tuned despite the fact that we had live feeds there from the UN. Thank you so much for your time, Temitope Olugbile. She's a semi-senior corporate finance at Deloitte Nigeria.